Hello everybody, this is Pat Walker, Mission Winners, doing a video overview of the ETFs. Why do we do this? It's not because we like to look at a ton of charts. It's because looking at charts of ETFs helps us focus on leading groups and the potential leading stocks in those groups. Here's a fact for you. Leading groups produce leading stocks produce leading groups. So what do? We take a look at the ETFs to see where there's strength, areas to delve into further. Flip that coin, areas to avoid. How about that? There's power in that too. So here we go. US Robotics has had a good run. Okay, the ticker symbol's BOTZ, and you can see it here. And it's pulling back just a little bit, all right? One slight negative is it lost the 21-day on a pickup in volume on Friday. The market's gotten a little sloppy, which has caused us at Mission Winners to be more conservative recently, not doing a lot of buying. We don't argue with the markets. Opinions don't pay, forecasts don't pay, newsletters don't pay. One thing pays, price pays, get in line with it. It'll really help you. Here's cloud computing, support on the 21-day. Needs to bounce off the 21-day. I mean, the trend is still up. Needs to bounce off the 21-day and do it on volume. Commodities, what does this tell you? Commodities are in a downtrend. Stay away from them. I mean, stay away from commodity stocks. There you go. It's that simple. You don't have to overthink it. Dow Jones Industrial Average, this is the diamonds, has support on the 50-day. Okay, not a lot of leadership. I mean, it was decent. Now it's kind of gotten, look at the volume. Heavier selling volume than heavier buying volume. They're selling it. Be cautious with that. That's only 30 stocks. Here we go. Dow Jones Internet. Okay, now look at this one, First Trust. This is hanging in okay. That's nice to see. Now, I'm not saying buy it, but I am saying it. This isn't exhibiting the weakness of a lot of other sectors. You can click on FDN and see out what their top 10 holdings are. There you go. There's power. But overall, you're going to see as we go through these ETFs, there's been some damage done. Continue onward, the IBD 50 still not showing any leadership. All right? This needs to take up these highs at around 24.90. Until it does, be careful. This is a proxy of the quote-unquote IBD 50 list. Those are good stocks, all right? They're anointed. But at this point in time, not a lot of power there. Be cautious with it. Continue onwards. It tells you leadership is lacking. Microsectors, FANGs, okay? Now, this is a special situation, okay? This is a triple leveraged, all right? You can punch this up on FNGU and see what their leading holdings are, and you can see it's been leading. Looking at this back here, you could find some things that are some winners. There you go. That's systematizing. Still trending up. A little bit of selling in here, but the trend is still up. There you go. There's some power for you. This one focuses on the MAXLIST stocks, FV. You can see, but I know that because it's here. But not a lot of power at this point in time. Tells us to be careful with the MAXLIST stocks. Continue onward. China. What does this tell you? In 1 second, be careful with Chinese stocks. Done. Gold miners. What does this say? Avoid the gold miner stocks. What does this say? Gold. Stay away from the gold. That's simple. Biotechnology. Not a lot of power in biotechnology. Just leave it alone. Look what it did on Friday. Fell on increasing volume. Leave it alone. Oil. What does this say? Oil and gas exploration. Avoid it. This is it. This is the... Why play the potential game when we can focus on strength? Strength begets strength. So, and weakness begets weakness. Now, look at this technology, IGV technology, moving on up. It's hanging in there. I just showed you a bunch that are really languishing. This one's hanging in. That's a good thing to see, all right, right here. I'm not saying buy it, but it does tell us that there's not a lot of real weakness in technology. You can punch up IGV and see what their top 10 holdings are. There you go. That's nice to know. Let's continue onwards. U.S. medicine's hanging in. Okay, it's not too bad. In relation to other ETFs or industries, this isn't too bad. All right? Medical stocks. Mid-cap, lagging. There's nothing to do with it. Falling on increasing volume, leave it alone. Mid-cap stocks. There you go. Aerospace and defense, lagging. Leave them alone. Oh, now look at this. Home construction. Oh, that's doing pretty good. Do we own some home construction stocks? I'll make a video on that, and you'll see. Yes, we do. We are heavy home construction stocks. Why? Because the market ETF, this ETF's telling us that it's strong. It has been telling us that it's strong. There we go. That's why we do what we do. Continue onwards. Small cap growth, S&P 500 growth. This one's hanging in here. That's not too bad. IVW, you can see what the holdings are in there, something to maybe take a look into. Let's continue onwards. IWM, what does this tell you? Stay away from small caps. That's it. It's lagging, and it fell hard on Friday on a pickup in volume. Be careful with small cap stocks. Real estate, lagging, and it has been lagging. Leave it alone. Transportation, oh, that one's hanging in there. Not too bad. Maybe take a look at that. Some leadership. Airlines, that one's hanging in there too. Maybe there's some power in some airline stocks. That's a dad humor for you. Sorry about that. But anyway, you can see what I'm talking about. When it really, no, I won't even make that bad pun. We'll leave that alone about it could really take flat. Oh, I said it anyway. It's taking flight. Okay, never mind. Okay, regional banks, there's nothing there, folks. Avoid the regional banks. Done. Mid-cap, no power. Be careful with mid-cap stocks. Oil services lagging. Look, it's below the falling 200-day. It's below the falling 50-day, or the rising 200-day slightly. But it's below the 200-day and 50-day. Here's a great investing fact for you, okay? The odds of making money are much better when an index or ETF or stock is above the rising 200-day and above the rising 50-day. It's that simple. There we go. Not much power there. Pharmaceuticals, it's okay, but still not a lot of power, all right? Software, above the rising 50-day, above the rising 200-day, pausing at just below the 21-day, which is the blue line, 21 exponential. It has been strong. Do we own some software stocks? Yes, we do. And you can see why. Look at the move up. There you go. One of them we've had for a long time is Microsoft. So continue onward. NASDAQ 100, QLD. I love this ETF. It is a great proxy of the big NASDAQ names. Apple, Amazon, Google, BIDU, all those big names. Microsoft, all of them. They're in here, okay? See this inside bar? If this could take out the highs of this bar, right here, Friday's bar, with volume, and I stress, with volume, that could be a potential buy. There you go. And it's telling us the big NASDAQ stocks aren't in that bad a shape. See this? Look at the trend. There you go. QQQ, same situation. Retailers are hanging in there. That doesn't look too bad. Maybe look into some retailing stocks. There we go. Silver, compare and contrast. Oh, that's kind of grinding up. Oh, silver, that's going down. Avoid silver stocks. That's it. You're done. Makes it say, steel lagging, avoid them. SMH, semiconductors. That's been hanging in. It's been trending up nicely. Do we own semiconductor stocks at Mission Winners? Yes. It's been telling you to. There you go. By the way, this has found support right here on the rising 21-day. That's good. Let's see if it can lift off of there. Spiders, S&P 500's hanging in there. Not too bad. Not too bad. But do note this. It dropped here on fairly heavy volume, and it dropped here on a pickup in volume. There's some selling distribution going on here. Be cautious with that. You combine that with the price action of a lot of the leading stocks, and you can see things are a little squishy right now. And that's okay. Same thing's true with SSO. It needs to bounce. Solar. This is why we do this, folks. In 1 second, it says stay away from solar stocks. You don't have to, oh, maybe it's going to bounce. Don't play the maybe game. We don't need to. Focus on strength. That will help you. Nothing to do with it. Small caps, TNA, leverage, lagging, leave them alone. Uranium, not much power there. I'd be careful with that. Oil, lagging. Another oil sector, lagging, leave it alone. Consumer discretionary. Now this one's hanging in. Look at that. VCR. I think it's kind of cute for consumer discretionary, and they use the name VCR, the ticker symbol, but it fits. Anyway, it's trending nicely. You could click on VCR and see what their top holdings are. XAR, dropping hard, leave it alone. Aerospace defense, biotechnology, lagging, leave it alone. Home builders, look at that thing grinding on up. Yes, and we're going to show you something here in a minute that's going to help you. You see this trend here? There you go. And it has been strong. Remember that. Home builders. Materials, no power there. Communications, oh, that one's hanging in too. That's not too bad. Something like energy, stay away from. XLF, stay away from financials. Industrials, that's kind of choppy. Leave it alone. Technology's still hanging in. It's not too bad. I just showed you a bunch of ETFs that look pretty rough. This one doesn't look too bad, okay? And yes, are we heavy in technology? We're heavy in technology, and we're heavy in ones that have trended for a long time, and right here, and we're heavy in home builders. There you go. Here we go. XLP, consumer staple, stay away from it. Healthcare, that's okay, but not that powerful. Look at this, consumer discretionary, XLY. There's some strength there. You could have looked, a couple of weeks ago. What are some of the leading stocks in there? That leads us, strength begets strength. It helps us focus on where to put our hard-earned money. Continue metals and mining, avoid. Oil and gas, leave it alone. Another oil and gas. Retailing, no power, leave it alone. Software was strong. It's given up just a little bit. Be careful with that, okay? Just be careful. It needs to bounce off the 21-day and up to the top. Now let's go to the max list. And this is why we love the max list. See this clean and simple base right there? And you see this trend? This stock has not closed below the, see right there? It didn't close below the 21-day exponential moving average. That's the blue line. By the way, for everybody to get you up to speed, the yellow line is the 8-period exponential moving average. There's a couple of years of research in that moving average with my trading partner from years ago. My brother from another mother, right there. I mean, a lot of testing and back testing. You can say, when did you do that? Oh gosh, probably right at the turn of the century. Probably around 1999 was when we were really crunching this thing, tearing it apart. And that's when we came up with the 8. There you go, 8-period exponential moving average. Now, if you've got one that works for you, great. I'm not telling you to change. No. You have one that works, stick with it. Good for you. So this is the 8-period exponential. This is the 21 exponential. This is the 50 simple and the 200 simple, just for what it's worth. What's Apple doing? Well, as I said, it's trending. Still in it, letting it work. Here's Amazon. Started to lift off right here. Still in it. Still in it. Have sold some. Started to lift off here on Friday. Backed off a bit. Still stayed above that line. That's a plus. And it went up on heavy volume on Thursday and pulled back on less volume on Friday. I'm not saying buy it. I'm just pointing out why we do what we do, explaining it. To know that 2 + 2 = 4 is good. To know why 2 + 2 = 4 is knowledge that's applicable to other situations. We strive to show why. All right? So there we go. Let's continue on. There's Amazon, as I'm pointing out here. Support on the ADMA needs to lift. All right? Up on fairly heavy volume on Thursday, down on less volume on Friday. So something worth watching. Amazon. Continue onwards. Alibaba, stay away from it. There it is. I mean, oh, this is where it might buy. We don't need to play the might buy game. Strength begets strength. It's not there, leave it alone. BIDU, same situation. It's just rough here. It's kind of choppy. I'd be cautious with that at this point in time. Google, own Google from back here. Back here. Ran up, took our last shares out, losing the 21-day for a good gain. Now it's just basing here. Oh, by the way, we had sells into strength up higher too. You see this bar where it runs up and it starts to reverse down on a pick? We were selling on that bar. There you go. Little telltale signs on what to look for. So right now it's just basing. Could it take out this top? Oh, there's potential there on Google. There you go. What's it need though? It needs good price action, good volume action, and a good market. There we go. There's Google. Continue onwards. Goldman Sachs, what does this tell you? I think I'll stay away from it. It might bounce here. We don't have to play that might bounce game, okay? The might game. Strength begets strength. There's nothing there. Leave it alone. Go to the next one. Done. MasterCard's just choppy here. I'd be cautious with it. Picked up a little bit on Friday, but it's kind of wide and loose here. Pretty ugly reversal bar there on volume too. It's just not a clean and simple base. Be cautious, okay? Meta. Buys. 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 Note the trend. Lost the 21 here and then bounces right back on a pickup in volume. Another buy. There you go. Have had some sells into strength, okay? But look what this did in a crummy market. Look what this did on Friday. And if you look closely, look at the trend up the ADMA. There you go. Trends pay. Had good support here and bounced right off of it on the 21-day exponential moving average too. Clean and simple base buy, clean and simple base buy, clean and simple base buy, clean and simple base buy. There you go. That's it. Please, I must stress, they all don't do this, but it's nice when they do. And the best part is this, and this is what we're after at Mission Winners, to show people what to look for and what to do. There you go. So it's working. For that, I'm thankful. Continue onwards. Microsoft, good buy here. Nice trend. Have sold some into strength. Support on the 21 day. By the way, you see that selling right in there and then follow through? Yeah, you take a little bit off. Now it's just basing here on the rising 21 exponential. Maybe it'll lift off, right? And if it does in a good market, that could be a potential buy. But it needs a good market, good price action, and good volume action. The next one, Netflix. Netflix. Look at this cup and a handle here. Look at the base here and the cup on the handle. Look at the volume pick up here. Buys here, trending. Some sells into strength, but look at the trend of the 8 EMA. Make that bigger for you. There you go. That's in good shape. And know what it did on Friday. This is a great lesson. This is what we teach in Mission Winners. What did it do on Friday? It gapped down, it fell, and then reversed up, closed near the highs of the day on a pickup in volume. Resistance right at the 8 EMA. Could it push through there? Well, we'll see. We'll see. But there's a great lesson. This is what we do at Mission Winners. That's it. Years of experience in doing that. NVDA, you all know this, but for the new VIPs and new followers, buys here and buys here. Right back in here. Higher low setup, folks. Here, buy here. Say your average price, we'll just say it's 155, okay? 155 bucks. More buys, more buys. There were some sells into strength along the way too. But I don't know about you, but I'll say 160 up to 430. People, VIP is still on this from here. There you go. And trends pay. One day right there, it fell a little bit below the 21-day moving average line. But other than that, beautiful trend. There you go. I'm not saying buy it now, okay? But I am saying this is what we look for. Refresh that. And now note this. Support on the 8 EMA. That's the yellow moving average. Maybe it's going to bounce off that. It's a shorter base though, okay? Shorter bases are less reliable. Just things to take into consideration. Also, you'd like a good market. So there you go. NVIDIA. Tesla. Entries here and here. Ran up. Locked those in, okay, on that reversal bar. Got loose here. Down on heavy volume. Up on good volume. Down on heavier volume. It's resting on the 8 EMA. What does it need to do? It needs to bounce off the 8 EMA. That's the yellow moving average. 8 exponential moving average. And do it on volume. MAXLIST, this has been really good to us through the years. I mean, really good. Take this out right there. In fact, this has been $1 million stock for some VIPs. So there you go. Inside bar, what does it need to do? Well, here's the negative. First off, it gapped up on Friday. I'll make this bigger to show you. This is what we do at Mission Winners. Gaps up, runs up. I'm just looking at day charts, by the way, and weekly. I'm not drilling down, to 5-minute charts. No. Gaps up, runs up, reverses down on a pickup in volume. Some selling pressure there. Not a lot, but some selling pressure. What does it need to do? It needs to bounce off this 8 EMA, take out the highs of this bar, and then take out the highs of this bar with volume and a good market. And until it happens, we have the discipline to wait. But you already noticed, price alerts are set. There we go. And then Visa, it's just kind of loose here, folks. That's kind of choppy.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.